Alrighty, thank you everyone for waiting, and apologies for the delays on our end. We're so excited today to be here on our LinkedIn Live show. We have Vincent Diallo and we have Mark Kiran. We're pronouncing that right as well. Been working on that. We're so excited today to talk today a little bit about the conversation around our Black investors doing everything for Black businesses and our Black businesses putting their best foot forward. We'd love to hear questions from you guys as we go in. But before we do so, we'd love to kind of introduce our guests a bit more and kind of get into their background and kind of how they found their way into the space and kind of the unique time period that we're in right now, which many of us haven't seen before. So we'll start there. Why don't you kick us off, Vincent, and tell us just a little bit about yourself?
Sure, happy to. Hello, everyone. So I'm Vincent Diallo. Needless to hide. I started investing about 6 years ago after a career as, I would say, finance operator at different businesses. I started my career at Deloitte in France, then moved to China, and then I worked for Deloitte in China, and then became the CFO of a food trading company. Got pretty well with that company, grew up from $50 to $200 million, exited it. Founder invited me to basically launch what became his family office, and that's how we started investing. And I say we because I do that with my buddy Joe, who's based in New York, and that's how we started. And 2 years ago, we're in position to launch Internet Venture, our own fund, which is dedicated to commerce technology at early stage.
Awesome, amazing. And Mark, tell us a little bit about yourself. How did you find your way into tech, and how did you find your interest in this whole space?
Sure, happy to give a little bit more background. I'm currently working on a venture studio called Risk VC, Risk Venture Studio. Previously worked at a fintech startup, VC-backed, Series A, founded by a Haitian-American entrepreneur. And before that, I worked in investment banking. In terms of interest in the VC space, I came across a blog called Innovation Footprints by Brian Long, who's an alum of my college. And I think that was the, trigger in terms of interest in the space. And I've been pretty curious about the space since then. Currently working with a number of early stage founders, focusing on investor readiness. So this is a pretty relevant conversation.
Amazing. So before we kind of go into the particular issue, I'd love to kind of set the stage a little bit and talk to you, Vincent, about kind of the questions around, I guess, what's different now? You know, you've been in kind of the venture capital space for a little while. I think everyone can sense that we're in a bit of a different moment, but I'd love to get your take on that and kind of hear, what do you think the last 18 months has changed as opposed to if we were having this conversation maybe 4 years ago?
I have a hard time to speak for the whole industry, so I'm going to speak for my industry. I would say for my vertical, which is more commerce tech, and probably my stage also, because I think it's fairly different when you go later stage and growth stage. So it precedes seed in commerce tech. So of course, commerce tech became super trendy with the pandemic, because of course there's a real shift in the way the consumer shop, transact, consume, getting to the, of course, huge innovation, and of course, huge shift calling for innovation, and so venture opportunities. So we saw record semester or quarter of funding in the space, and suddenly this vertical became super fancy. It was not the case 3-4 years ago when we were saying that we were investing in retail technology. People were looking at us, are you crazy, or there's nothing to be done in this space? So it's quite fortunate to see an acceleration and a confirmation of this opportunity on the US market, because indeed there's a lot to be done here. I'm saying here by comparison to other market that I'm exposed to, not directly, but more culturally or in my personal life, say Europe and Asia. There's a lot, there's many opportunities, and founders really identified and grabbed these opportunities. So we see not only many projects, but also a lot of funding. And generally speaking, I would say, I don't know if I could time it exactly at the beginning of the pandemic, because I don't think it's a new trend, but definitely there is an acceleration within last year, is the amount of money that is available on the market. start to be a little bit crazy, right? So to be a little bit too hot.
Yeah.
Last year was a record year for fundraising for new fund. Of course, we have these mega funds that capture a significant portion of the amount that we can see in the stats, in the news. But still, there's a lot of money available for venture, whether it's among giant funds, but also myriads of micro funds. So the result of this, I think, is at two levels. First, we're definitely in the founder market today. So I would say that valuation increase because the founder has the opportunity to, let's say, negotiate a little bit harder than before. He's in much more favorable position. Yeah. Which is great for founder. That puts a little stress on the VC math, though, especially for micro VC. And we're part of this micro VC part.
I'd love to, can you dive into a little bit more about that? Because I think some people will know what a micro VC is, other people, they're not really. How would you define it? I guess it's still pretty loose, but how would you define that?
It's pretty loose indeed, defined by the market. Yeah. I saw some definition in the past that a micro VC fund is like it's below $100 million asset under management. From this regard, sometimes we joke around and say we're a nano fund in that case. VC. I think you can make a real distinction starting at 50 million and below. I think we're already in the realm of micro VC. Beyond that, you have investors that can touch directly later stage. The constraint probably of a micro VC is that for the sake of probably mainly active at pre-seed and seed stage. Yeah. When probably more experienced GPs have already the capacity to justify a strategy at later stage. And so can raise bigger fund where the math make the portfolio structure relevant. Yeah, exactly. And so, there seems to be, and to jump in here as well, but there seems to be quite a few impact investors, minority investors who are in the micro VC space. There's probably a higher representation there than you'd see in the Series A or more established funds that are larger, some of the names that everyone knows. Do you think the fact that a lot of there's more micro VCs, how does that, I guess, because a lot of minority founders are going to the micro VCs, is there different ways that they should approach them, that understanding that maybe they can't be a lead investor, some of those types of things? Oh, there's many questions. I know. I had about 10 questions I was trying to boil into one. It's about 3 or 4 questions. So if I take one by one, more, let's say, underrepresented GPs in the micro VC space is very probable. Reason is, and I don't have all the stats. And we're the analysis, but very probably is because those are emerging managers, and emerging manager will very probably start their first fund below $100 million target. So that makes a lot of sense. And why we see probably the representation increasing because of the movement towards, let's say, solving this pipeline issue at entrepreneur level, starting by solving this pipeline issue at investor level. So all this makes sense, and it's also a mirror of all the initiative we saw at, I would say, institutional investors for those micro VC funds. Institutional LPs, but not only. Many corporates entered the game and started to have a real, let's say, practice of acting as a fund of fund. Just to name one, but I think we can all recall this and acknowledge that there's a real effort that has been made at this level, and not because they are my LP, but yes, also. But PayPal did a really, really good job and really put the dollar where their speech was. Where their words were, and it's been impressive to see PayPal as an example. The level of the amount of capital that has actually been allocated to those emerging GPs coming from underrepresented groups. So that was one question. part one. I don't remember the other. The other question I was kind of getting into is, and I'm sure Mark, you can kind of comment because you've worked with some of the founders as well, right? Thinking from the terms of they're looking for, a lot of times they're told to find a lead investor, but maybe that's not the right kind of fit for micro VCs. They're going to these micro VCs
thinking that that person can lead the round, but that's not necessarily the case.
And let's dig into that. Like, let's not just assume everybody understands the significance of a lead investor. Like, it's a terms thrown around, right? But let's kind of define it from the VC perspective, and Mark, jump in here too. Like, what your perspective is too. Like, how do you define that term, right?
Yeah, I guess my question for Vincent to start would be, should early stage founders looking for seed funding try to get angel funding first and leverage that to close a lead investor, or should you try to identify a lead investor and reverse engineer it to attract more angel investors? Like, how should you go about getting your first wins?
Okay, I have a very controversial opinion on this. So that's my own thoughts. Let's say at pre-seed stage, so probably before launch, put it this way, and pre-seed on the standards of the Silicon Valley and probably the Silicon Alley, we're talking about a round that is more or less $1 million. I mean, it can be $500K to $2 million. So that's the range. So it can be definitely a combination of individuals, angels, super angels, and funds, micro VC funds, and funds with more capacity, definitely. There's always this question about lead that coming up when you discuss with founders. Like, yeah, people tell me to ask for a lead, and if I get a lead, people will come to me. So the way I see it, a lead investor define the terms and generally put the bigger check, the biggest check. So in that case, we're talking about an investor. We're going to put check of $500K to $750K. At the same time, we expect, and that may be a second part, we expect more support from the lead investor to help the company to go from 0 to 1. Great. My point is, whatever the structure of the round at pre-seed or even seed stage, but super early stage, I would say, you need the founder needs to surround himself with people that really will bring value on top of the money they can inject. Reason is there's a lot of money around on the market today, and anybody who has something that is solid and who is able to communicate this vision in a way that is magnetic and attractive will find the money. It's a number game. So the question is, of course, is about how smart is this money? So you need to surround yourself with people that bring value. So that's the first element. So on this question of lead, at this stage, you don't want to spend too much money on legal fees. So we're going to take a very standard terms. So generally, and that's the practice today, it's a safe plus money, and these terms are known by all the investors and normally all the serious founders. So there's no question of terms. So then the lead investor is not leading the terms. He's not defining the terms. Is he going to bring support? I think support and value is not always proportional to the size of the check. And so what else do we need a lead investor for? So you got my point. I think at this stage, there's no need of lead investor. Of
you
course,
think, that is controversial,
I know. It's reinsurance and insurance for the investors that decide to put some money. You can put a minimum amount of money that is necessary to go from 0 to 1. But putting the condition, if there is a lead investor, I jump. I think it's the expression of a follower.
Do you think it has a signaling factor?
If there's a strong signaling factor, and the industry is very sensitive to signaling factor, but you need people who have conviction at this stage.
At the early stage,
people that are following. Of course, if Sequoia put a check, everybody wants to be in the round. And so then, you have a lead. Of course, if it's a tier 1, everybody gonna jump in. Let's be clear, we all, despite even all what I say, I'm also sensitive to signaling, even if I'm trying not to be. But I think the founder, a good founder is in position to say, that is the amount I'm raising, these are the terms, that's the valuation that makes sense for the equity history I want to build. And if you're interested, jump in. Is there a lead? There is that much money, that's the minimum money that I need to go to the next level. And I only want smart money around me. Lead, no lead, I don't think that's a question that should arise at early stage. And I think that anybody that say, yes, if you have a lead, let me know, is just a follower. There's no real conviction. I don't think that's
And at
a
the-
condition to
at
give
that-
to somebody.
At pre-seed, that's you have to what you're saying. A smart money. You have to be very careful about who you're letting in.
Exactly,
And
knowing
who's-
that you're gonna get married with this person for the next
5-10 years. Yeah.
Exactly.
Yeah.
And you want to have to be able to meet with this person to share these moments of challenges and to be open to this person. You have to be willing to talk to this person. So that's more this what you're looking for: expertise, support, energy bringer, and
Yeah.
access. Then of course the big name is great. Don't get me wrong. but
Yeah.
I'm a little bit annoyed by this kind of practice saying that if you don't have a lead, I'm not interested. It doesn't make sense at all.
Yeah.
It's
Yeah.
one mind. You can do a really good round with no real lead.
Yeah.
And, most of the time when I hear that to founders say, no, that's not the question. The question is how much money you need.
Yeah.
It's not about a lead, no lead.
Very interesting.
And it's controversial.
Maybe. I mean, but if we talk about Black founders in particular, and what you just mentioned is particularly resonant, right? Because
Yeah.
I don't know that Black founders perceive themselves, I don't know if we perceive ourselves to have the number of opportunities or at-bats as some of our counterparts, right? So as it relates to Black founders, do you see that type of trepidation when you're dealing with Black founders? Is there something that you take into account that they've maybe, we talked before and you mentioned, and I'll paraphrase what you're saying, but you mentioned your understanding of the fact that whatever those founders of color, underrepresented founders had to do to get in the meeting with you, you are regarding that as a plus, right? Their ability to have done that is a plus to you. So, part of the premise of this conversation is what do Black investors, how should they be better serving Black founders, and how can Black founders better represent themselves to Black investors and investors in general? So I wonder, I'd like your perspective, and both of you, what are your thoughts on that? Like Black people, Black founders in particular, we don't have as many at-bats. One could argue that when we do get at-bats, we tend to do very well. So it would seem that it's a good investment in general, but I'd like to hear just anecdotally, like what your experience has been with that and how you regard Black founders in particular, if there's something unique about them that you, in dealing with Black founders, that you might do.
Do you want to take that, Mark? I'm happy to jump after.
Yeah, sure. I mean, I think ultimately, some of the most capable Black founders are experiencing some success, right? A lot of them usually have access to pre-established networks that they can leverage to facilitate a fundraise, right? And I think you will rarely find those people kind of complaining on Twitter about lack of funding, but it's some of the